All right, so you're looking into this NTPC Green Energy Limited IPO. And you want the essential facts without, getting lost in the weeds of all the financials. We're here to kind of help you navigate all this. We're going to be dissecting everything from their business model to their financial health. We'll be flagging any risks and analyzing, how they plan to use the IPO funds.
Yeah, we'll even be looking for any red flags that might pop up along the way. Think of us as your shortcut to becoming an informed investor, basically.
Perfect. So let's just start with the basics, like who are they, what do they do? NTPC Green Energy Limited is all about renewables. It's a subsidiary of NTPC Ltd. And NTPC Ltd. Is a major player in India's power sector. And NTPC Green Energy, they're focused just on generating power from sources like solar and wind.
Yeah.
And even, we're hearing more about these green molecules now. So
Yeah, those are getting a lot of buzz. What's interesting here is their ownership structure. So one promoter is the president of India, which is a pretty big deal. They're acting through the Ministry of Power, and the other is, of course, NTPC Limited.
Okay, so they got some serious backing behind them. They're not just starting out either. They've already surpassed 3 GW of operation capacity. To put that into perspective, that's enough to power a city the size of Bangalore.
Yeah, it's impressive, and their growth plans are even more ambitious. They have a pipeline of projects totaling 25,671 millibagalius. That's like adding 8 more Bangalores to the grid.
Wow. So that's a really serious commitment to green energy. But ambition needs to be backed by, solid financials. What's the story there? Are they generating, healthy revenue?
They are, yeah. The majority of their revenue comes from selling solar and wind energy, which, that aligns perfectly with their mission. It shows they're actually doing what they say they're doing.
That's reassuring, yeah. What about their overall financial health? Are they in good shape?
Yeah, their financials look good. Their net debt-to-equity ratio has improved a lot, actually. It's dropped from 4.41 in March of 2022 to 1.98 in March of 2024. So that shows they're managing their debt well and moving toward, a stronger financial position.
Okay, that's a good sign. But are they actually making money? What do their profit margins look like?
Their recent special purpose carved-out combined financial statements for fiscal years 2023 and 2022 show strong profitability. These statements are designed to show the performance of the subsidiary that's being spun off for the IPO. Their profit margins are healthy, and their return on net worth is also impressive.
Okay, so it sounds like they are ticking the right boxes when it comes to financial performance. But as with any investment, there are always risks. What should we be aware of with NTPC Green Energy Limited?
You're right. No investment is risk-free. One big risk is competition. The Indian renewable energy sector is attracting a lot of players, both domestic and international.
Okay, so it's a crowded space. Who are some of their main competitors?
They're going up against some heavy hitters. Companies like Adani Green Energy, Renew Power, Tata Power, and Azure Power. They're all vying for market share in this, rapidly growing sector.
Okay, so that's intense competition. How does NTPC Green Energy plan to, stand out in that kind of competitive landscape?
Well, one big advantage is their strong parentage. Being a subsidiary of NTPC Limited gives them access to, decades of experience and resources and relationships in the sector. And that provides a significant edge when it comes to project development and financing.
Yeah, so it's like having a mentor, kind of,
Right.
guiding them through this complex industry. But let's not forget about the regulatory environment. Are there any potential risks related to, government policies and regulations?
Absolutely, yeah. The renewable energy sector in India is heavily influenced by government policies. So changes in things like feed-in tariffs, that's the price they get paid for the electricity they feed into the grid, or renewable purchase obligations, which are requirements for power distribution companies to buy a certain percentage from renewable sources. Any changes there could impact their profitability.
So you got to keep an eye on the politics, too. Now, before we dive into the IPO itself, is there anything else we should be aware of regarding their business model or potential risks?
I think one thing that's important to mention is employee reliance. All of their employees are actually on secondment from the parent company, NTPC Limited.
Oh, okay. So that sounds cost-effective, but what happens if those terms change?
Exactly. It's a good question. If NTPC Limited decides to change things, it could disrupt operations. Imagine if they suddenly need those employees back for their own projects.
Okay, that's a potential vulnerability. Now let's get to the IPO. Where is all that money going?
According to their draft red herring prospectus, they plan to use the IPO proceeds mainly for capital expenditures, basically investing in upcoming renewable energy projects. This includes things like developing new solar and wind power plants.
So they're going to use the funds to basically fuel their ambitious growth plans. Are there any specific projects that they have earmarked for this funding?
Yeah, their DRHP highlights a pipeline of projects, including some in Rajasthan and Gujarat, which are known for their solar potential. These are in various stages of development.
Okay. It'll be interesting to see how they prioritize these projects. But the big question for investors is this a good deal? What's the valuation looking like?
Well, to determine that, we need to look at a few things, like their price-to-earnings ratio, or PE ratio, and compare it to their peers, like Adani Green Energy and Renew Energy Global. That'll give us an idea of whether their asking price is fair.
So benchmarking against the competition, are there any other financial metrics we should consider?
Absolutely, yeah. The price-to-book ratio, or PB ratio, is another important one. It gives us insight into how the market values the company's assets compared to their book value. A higher PB ratio often means that investors believe the company's assets are worth more than what's on the books.
Okay, so PE ratio and PB ratio. What else?
We should also look at the overall industry potential. India's renewable energy sector is booming, right? This is driven by government targets for clean energy and just the increasing demand for power as the economy grows. So understanding the industry's trajectory helps us gauge NTPC Green Energy's long-term prospects.
It makes sense. A company can look great on paper, but if the industry itself is struggling, that's not good. So where does NTPC Green Energy stand within this sector?
Based on their capacity and their plans, they seem to be positioning themselves as a significant player. But to really assess their market position, we need to look deeper into things like their market share.
Right, we've covered a lot about the company, but we can't forget about the people behind it, right? The promoters. You mentioned that one is the president of India, which is very unique. Tell me more about NTPC Ltd, the other promoter.
So NTPC Ltd is a public sector undertaking. It's under the Ministry of Power. They have decades of experience in power generation, so they're a very established and knowledgeable presence in the industry.
So it's a blend of government backing and industry expertise. Interesting. What will their stake be after the IPO? Will they retain a lot of control?
Currently, they hold 100%, so the IPO will dilute their stake, but they're expected to remain the majority shareholder, so they'll maintain a controlling interest.
Okay, so that's a signal of confidence for potential investors. Now let's talk about dividends. Are they planning to share the wealth, so to speak?
Their dividend policy, it's outlined in their DRHP. It indicates they intend to pay dividends, but subject to certain conditions, like profitability and future capital requirements. So there's no guarantee, but it's a potential upside.
Okay, so dividends are on the table, but not a sure thing. Now let's shift gears a bit and discuss corporate governance. How does NTPC Green Energy measure up in terms of transparency and accountability?
Well, their DRHP sheds light on their corporate governance practices. They have a board of directors with executive and non-executive members, including independent directors, so that suggests a commitment to diverse perspectives and oversight.
Okay, so there are checks and balances in place. What about their track record? Have they had any issues with compliance in the past?
They haven't been flagged for any major breaches, but it's always good to review their past disclosures and regulatory filings, just to be sure.
Yeah, always good to be thorough. Okay, now let's put on those detective hats. Are there any red flags, like related to related party transactions or anything in the auditor's opinion that raises concerns?
Right, the fine print. So the auditor's report, which is in their DRHP, it did highlight a few areas for improvement in their internal audit system, things like the frequency of reporting and the coverage of their operations and the scope of their transaction audits.
Okay, so the auditors are suggesting there's room for improvement in their internal controls. Are there any specific examples of related party transactions we should know about?
Yeah, so the carved out combined financial statements, they mention a capital advance given to NTPC GE Power Services Private Limited, which is an associate company of NTPC Limited, the parent company. You know, this kind of transaction, while not necessarily improper, it does warrant scrutiny to make sure it's all fair and transparent.
Yeah, it definitely raises a question mark. Anything else stand out in the auditor's opinion?
Yeah, they emphasize that NTPC Green Energy relies on its parent company for recording employee benefit expenses.
Oh, so they're outsourcing a key part of their accounting to their parent company.
Precisely. Which might be operationally efficient, but it creates dependence on the parent company. And it raises questions about how much independent control NTPC Green Energy has over their own financial reporting.
Okay, that's definitely something to think about.
Yeah.
Investors might want to dig deeper into that relationship. Okay, so we've covered a lot about the company, but let's zoom out for a second and talk about the bigger picture. India's renewable energy sector, what's the outlook?
It's booming. India has set these ambitious targets for renewable energy capacity. They're aiming for 500 gigawatt by 2030. This push is driven by concerns about climate change, the need for energy independence, and, the falling cost of these technologies.
Okay, so there's a lot of momentum. What are some key trends shaping the industry?
One major trend is the shift towards solar. India's solar installations have been growing exponentially in recent years, and this trend is expected to continue. There's also a growing interest in wind power, especially in states with good wind resources.
So NTPC Green Energy is riding this wave. But we talked about competition earlier. Who are they up against in this market?
So they face competition from both public and private sector companies. Some of the biggest names are Adani Green Energy, Renew Power, Tata Power, and Azure Power. They're all competing for a piece of this rapidly expanding market.
Okay, so it's a very dynamic landscape. What makes NTPC Green Energy stand out? What are their strengths?
I think one of their key advantages is that strong parentage again. As a subsidiary of NTPC Ltd, they have access to their vast experience, their resources, and their relationships. This gives them an edge when it comes to things like project development and financing and execution.
It's like having a mentor, like you said earlier. Are there any other benefits that stem from that connection?
Definitely. NTPC Ltd has a really strong track record in power generation and transmission. And that expertise is super valuable when it comes to integrating renewable energy projects into the existing grid. It ensures smooth power evacuation and distribution.
So they're not starting from scratch with grid connectivity. That's a big plus. Now let's switch gears a bit and talk about the management team. Who are the key people at the helm?
So their DRHP has details about their board of directors and key managerial personnel. They all bring a wealth of experience in the power sector, finance, and project management.
So they've got the right skills and experience. What about their leadership style? What's their vision for the company?
Based on what they've said publicly and the company's strategy, they seem very focused on aggressive growth and establishing NTPC Green Energy as a dominant force in India's renewable energy market.
So they're aiming high, but it's not all about profits, right? What about sustainability and social responsibility? How are those integrated into their practices?
Yeah, the DRHP highlights their commitment to sustainable development and environmental stewardship. They have various initiatives to minimize their environmental impact and to promote social well-being in the communities where they operate.
So responsible growth. That's good to hear. Now back to the risks. We've discussed competition and regulations, but are there other potential challenges they might face?
One key risk is execution risk. Developing and operating these large-scale renewable energy projects is complex. It's capital-intensive. Any delays in project implementation, cost overruns, or technical difficulties could really impact their profitability.
Right. It's not just about having a plan, it's about executing it. What about financial risks? Are there any concerns about their debt levels or their ability to generate consistent cash flow?
Their debt-to-equity ratio has improved, like we discussed, but it's still something to monitor. And their ability to generate cash flow consistently will depend on a lot of factors, like the terms of their power purchase agreements, the operational efficiency of their plants, and the overall market conditions.
Okay, so their debt management and cash flow are things to watch. Are there any external factors that could impact their business?
Well, the global economic landscape is always changing, so any significant slowdown in the Indian economy could impact the demand for power, which would affect their revenue.
So they're not immune to those global trends.
Yeah.
Let's dig into their financials a bit more. You mentioned their PE and PB ratios earlier. What insights do those offer about their valuation?
Right. So comparing their PE ratio to their peers gives us a sense of how the market values their potential compared to others in this sector. A higher PE ratio suggests investors are willing to pay more for their earnings growth.
Okay, so a higher PE ratio could be a sign of confidence. What about the PB ratio?
The PB ratio helps us understand how the market values their assets relative to their book value. A higher PB ratio often indicates that investors think the company's assets are worth more than what's on their books. This could be because of things like brand value or growth potential.
So both ratios offer different perspectives on their valuation. But it's not just about the numbers, is it? We also need to consider the qualitative factors.
Exactly. Things like the strength of the management team, their competitive position, and the overall industry outlook. All of those play a big role in a company's long-term value.
It's about the big picture.
Oh, yeah.
Okay, let's talk about the IPO price. How did they determine that offer price range?
So the offer price range is usually determined through a process called book building. This is where institutional investors bid for shares, and the final price is set based on the demand and the bids they receive.
So it's a market-driven process. What factors do investors consider when evaluating that price?
Well, they look at a lot of factors like the company's financials, their growth prospects, the industry dynamics, the overall market sentiment. They also compare the offer price to the valuations of comparable companies that are already listed.
It's a lot to consider. Now let's fast forward a bit. What should investors keep an eye on once the company is listed?
I think it's important to track their quarterly earnings reports to see if their financial performance is on track and if they're meeting their growth targets. You should also pay attention to announcements about new projects or partnerships. Those are good indicators of future growth.
So staying informed is key. What about the stock's performance? What might influence its price movements?
The stock price will be influenced by a lot of things, like their earnings, industry trends, market sentiment, and of course, any news or events that might affect how investors see the company.
Right, so it's constantly changing. Let's go back to the auditor's opinion for a second. They pointed out some areas for improvement in NTPC Green Energy's internal audit system. What are the implications of that for investors?
Those comments highlight potential weaknesses in their internal controls and reporting. While these might not be major issues right now, they could pose risks if they're not addressed.
So it's a yellow flag, not necessarily a red flag. What could they do to address these concerns?
They could improve their internal audits, make sure they cover all operations and transactions thoroughly. They could also strengthen their overall internal control framework to try to prevent risks.
So basically bolstering those internal controls would be good. Now, let's talk about those related party transactions. You mentioned an example from their statements. Why are these transactions scrutinized so closely?
Right. Well, related party transactions involve dealings between a company and entities or individuals who have a close relationship with the company, like parent companies, subsidiaries, or key management people. And these transactions can raise concerns about conflicts of interest and whether they're conducted fairly and transparently, what we call at arm's length.
Right, so there's a need for transparency to make sure these transactions are fair, and not just benefiting the related parties at the expense of the company or other shareholders. What safeguards are in place to address these concerns?
So companies generally have to disclose related party transactions in their financial statements. They have to provide details about the transaction, the parties involved, and the value of the transaction. And they also usually have to get approval from their board of directors for these transactions.
So there's some oversight involved there. Okay, let's shift our focus to the global stage for a bit. How does India's renewable energy growth story stack up against other countries?
India is quickly becoming a global leader in renewable energy. Their growth in solar and wind power is among the fastest in the world. And the government's targets are attracting a lot of investment.
So they're a major player in the clean energy race. But are there any challenges on a global scale? Any trends or factors that could impact their progress?
One challenge is the volatility in global commodity prices. The cost of things like solar panels and wind turbines, those can fluctuate a lot, which can impact project economics and sometimes even lead to delays.
So it's not just about internal factors. They have to keep an eye on the global supply chains, too. What about advancements in technology? Are there any game-changing innovations on the horizon?
The renewable energy sector is always evolving. There are definitely some interesting developments to watch. Advancements in battery storage are key because they can help address the issue of intermittency with solar and wind power.
Right, so having reliable energy storage is crucial for a smooth transition. Are there any other technological breakthroughs we should be aware of?
There's a growing interest in green hydrogen, which is produced using renewable energy. It has huge potential to decarbonize things like transportation and heavy industry.
So green hydrogen could be a game changer. Bringing it back to NTPC Green Energy, how are they positioned to handle these global trends and challenges?
They seem to be proactive about adopting new technologies and exploring those new opportunities. Their focus on developing a green hydrogen hub and including battery storage in their projects shows they're looking ahead.
Okay, so they're not just focused on the now, they're planning for the future. Now let's talk about the investment implications of all this. What are the key takeaways for investors considering this IPO?
First, I'd say consider their growth potential. India's renewable energy market is growing fast, and NTPC Green Energy is in a good position to benefit from that.
So they've got the right market conditions. What about the financial side of things?
You definitely want to look closely at their financial health. Things like their debt levels, profitability margins, and cash flow. Compare those to their peers to see how they stack up.
So do your due diligence. What about risks? Any red flags investors should be watching out for?
Keep in mind those execution risks we talked about. It's a complex business. Delays or cost overruns could really hurt their profitability. Also, remember their dependence on their parent company and those related party transactions. Transparency is key in those areas.
It's all about weighing the potential rewards against the risks. Okay, as we wrap up this deep dive, what final thoughts do you have for our listeners?
I think this IPO offers a chance to be a part of India's renewable energy story. They have a lot going for them. A strong parent company, ambitious plans, a commitment to sustainability. But like with any investment, you have to do your research. Carefully consider the risks and rewards, and make a decision that aligns with your own goals.
Excellent advice. So there you have it, folks. We've explored NTPC Green Energy Limited, their IPO, and their role in India's renewable energy sector. Remember, investing is a journey. Stay informed, do your research, and invest wisely. We'll see you next time.